Hey Crypto Fam, and welcome back to the Beginner's Guide to Cryptocurrency and Blockchain with me, your host, Crypto Karin. Now, if you follow me on TikTok, you know I've taken a couple of weeks off, so that's a good reminder that it's important to take a break when you need it and to take care of your mental health. But I'm back, and you might remember last week we covered crypto and fundamental analysis, which is the study of the fundamentals of a project or a crypto or whatever else. And this week, week 4, episode 4, we are looking at cryptocurrency and technical analysis, or TA. Fundamental analysis and technical analysis are two ways of looking at the crypto markets or the crypto charts or the crypto projects. So if fundamental analysis is the big picture approach, looking at the value, the intrinsic value of a project because of its fundamentals, technical analysis studies price movements to identify trends and predict how markets might move in the future. There are advantages and disadvantages to both, and if you're an active trader or a passive trader, you're probably going to use a mix of both. So let's check out this infographic, which is available for purchase on my website, cryptokarin.com. So let's focus on technical analysis. Technical analysis looks at an asset's historical market performance. By examining how the price moved previously, traders will try and predict how it will move in future. So when you're reading charts and looking at what a crypto project has done or a stock has done in the charts, what you're doing is technical analysis. You're looking at, is the price rising or falling? Are people putting in money or taking out? Is it traded? How is it being traded? What is the market cap? These are some of the questions you'll be asking when doing technical analysis. Now, as we all know, the crypto markets are very, very volatile. So if you're using technical analysis to predict price movements and you do that right, you can bag some huge returns. Technical analysis is largely based on a theory called the Dow Theory. Now, because I want to keep this session short, I'm going to skip over this, but we'll give you a moment to pause and have a read about the Dow Theory. Now, if you've been in the crypto market for a while, you've probably heard the terms bear market and bull market, or bearish and bullish. The terms bear and bull are frequently used to describe the general actions and attitudes or the general sentiment of a single asset or a single crypto or of the market. So a bear market occurs when the price of a crypto or the market is down, usually for a few months, and there's a lot of debate about whether we're in a bear or a bull market right now. A bull market, on the other hand, occurs when prices rise. Now, this was interesting. I looked up why they're called bull and bear markets. The terms bear and bull are thought to come from the different ways that each animal attacks. So a bear market, market goes down. A bull market, market coming up. Bit of trivia for you. So we're learning some terms that are relevant to technical analysis, and volume is a term that's relevant. Volume is a measure of how much a financial asset has traded in a period of time. It basically shows how much of that asset has changed hands during the measured time. So you're looking at how much that asset is being traded, which can tell you a lot about, the market sentiment. Are people keen on the asset? Are people not keen on the asset? Are people selling a lot? Are people buying a lot? This is all relevant to volume, and it's a part of technical analysis, looking at the volume. So if we think fundamental analysis, looking at the project's fundamentals, and technical analysis, we're going to be looking at charts. So technical analysis, or TA, relies on charting techniques and trading statistics. A chart is a graph that tracks the price of a financial asset, such as a stock or a crypto or a commodity, over a specific period of time. For example, 1 day or 5 years. So when you look at the crypto charts, you can generally adjust the time. Am I looking at the 1 month, the 1 week, the 1 day, the 1 year, the all-time trading? What chart are we looking at? So you can change that when you're doing technical analysis. So I talked a little bit about time frames for charts. The choice of a time frame usually depends on a trader's trading strategy. So if they are looking to open and close positions quickly, quick trades, and these people would prefer very short time frames, such as 1 minute or 5 minute charts. There are also people that prefer 5 minute or 15 minute or hourly charts, or position traders who prefer a long-term approach and use daily or weekly charts, and then beyond that as well. So, technical analysis techniques for crypto. Candlestick charts are one of the most important or popular chart choices among traders. So I'm sure you've seen the candlestick charts. That is being used to try and guess where a crypto is going in the future based on past performance and technical analysis. So when looking at a candlestick chart, you're trying to spot a pattern where the price is clearly moving in one direction for a period of time. So you're spotting trends, or you're trying to spot trends. Two more terms that you'll come across doing TA: all-time high and all-time low. So obviously an all-time high is the highest price an asset has ever had. An all-time low is the lowest price. Sometimes groups of candlesticks or candlestick charts fall into recognizable patterns with their own names. Pattern recognition is used to forecast trends, price direction, and general momentum. And you can see on the right there, I have an infographic also for purchase on www.cryptokarin.com. This is the Cryptochart Pattern. It's a handy educational reference. So price patterns appear when traders are buying and selling at certain levels, and therefore we're seeing the price between these levels. And when prices are tracked or represented on the charts, we can see patterns. And patterns, again, help us try to predict the future. Now, you can see that technical analysis is not my strong suit. I don't usually do a lot of technical analysis, mostly because it is really, really time consuming. I'm a big fundamental analysis person, but there are tons of free and paid tools, resources, and websites that you can use to help you learn how to do technical analysis, how to read charts, how to predict the future or try to predict the future based on previous chart and price patterns. Some of these include TradingView. TradingView is a really useful one. It's arguably the most popular charting and technical analysis platform, or Coiny, or CryptoWatch, or there's just tons more. And here I've listed some more. So look, a quick summary of technical analysis. There is fundamental analysis and technical analysis, and both are techniques that people are using to understand a project, to understand how it's behaved in the past, and to understand how it may behave in the future. So you, as part of becoming a crypto trader or holder, are dabbling in both. You're trying to understand what a crypto project is doing, what it has done, and what is your preferred method of analysis to look at this project. So good luck. It is really exciting that you're starting this journey with me, and thank you so much. I hope you stay in touch. I hope you stay tuned for the next episode. I hope you stay in tuned for the next 6th episode of the Crypto Karin Beginner's Guide to Cryptocurrency and Blockchain series. So thank you guys so much again, and I hope to see you next week.